500 was sitting at fresh all-time highs. Since then, it has fallen the greatest amount since the March lows. Now, I'm thinking that it's getting ready to turn back up again, make new all-time highs again, and in just a minute, we'll dig in. I'll show you what I'm seeing. For those of you who haven't spent time with me before, I'm David Starr, Vice President of Quantitative Analysis here at Simpler Trading, and I tend to look at the markets through a very analytical lens. One of the main tools that I use as we come in and bring up the charts here that we'll be looking at is Elliott Wave. And we'll be talking about some Elliott Wave analysis as we dig into things, but we'll also be talking about a number of different things that that I'm seeing in the markets here. So here on the charts, you can probably see what I'm talking about here, right? The fresh all-time highs at this horizontal white line up here that we made a week and a half ago. And since then, almost, but not quite, to a similar horizontal white line down here. These are the Voodoo lines. We'll talk about them in just a little bit, right? But this is the move down, and I think we're getting ready to turn back up again. So when we look at markets from an Elliott Wave perspective, what we're looking at is patterns that unfold that are different when the move is going with the direction of trend and against the direction of trend. So moves with the direction of trend tend to have a 5-wave structure. So perhaps up from this low here, 1, 2, 3, 4, 5. I don't know that that's the right interpretation, and only time will tell, right? But when something is going with the direction of trend, that's what I expect to see. Meanwhile, when things are going against the trend, say this pullback right in here, those have 3-wave moves. And when we see a 3-wave move, that tells us that something is likely counter trend. Now, if we get a counter trend move heading downwards, then that's another way of letting us know that the trend remains up. And that's exactly what I'm seeing here in, or what I think we're seeing in the move down from this high up here, right? So A, B, C, that's how we label 3-wave corrective moves in Elliott Wave labeling. And when we see that, that tells us, again, that it looks like this move is counter trend. Now, there are a number of counter trend patterns in addition to this most basic sort of 3-wave counter trend move here like this. There are combinations of multiple 3-wave moves, right? So a second 3-wave move to the downside, and I'll put in a second box here, has the potential to end this move down from a week and a half ago. And it also adds to the corrective appearance of the move to the downside, right? If all of these look like these 3-wave moves, they're all going to look counter trend. Now, it doesn't tell us for sure that even if things are counter trend, that counter trend move is going to be over. So it is still possible that that we get a deeper pullback here, and we'll talk about that as well in a minute. But the combination of multiple moves that look like they're 3-wave in structure suggests that whether last Friday's low holds or not, that it looks like we're heading back up. And I think that there's a good chance that we're heading back up now. Now, one of the clues that I'm looking for there, or that I'm seeing, is in the move back up from Friday's low. Remember, we said that moves in the direction of trend have that 5-wave structure. They go up 1, 2, 3, and then a fourth wave, and a fifth wave. And so if this move is turning back up and exhibits that five-wave structure, that's going to tell me that more than likely we're heading back up in a trend-like manner. Now, this may seem pretty abstract right now, and there are more rules to what makes a suitable five-wave move and three-wave move than just being able to throw the numbers on a chart and draw some lines and say, see here, 1, 2, 3, 4, 5. And we'll take a look at those or talk through some of them. We won't be able to cover all the depth of Elliott wave analysis here, but I want to give you a sense of how and why this is giving me the impressions that it is, right? So with this leg up that we had today, so much longer than this move right in here that preceded it, it's still possible that this is one of those three-wave moves. But when this move up gets so much longer than this one, odds favor the fact that we get a fourth wave move down and a fifth wave up. Furthermore, the manner in which we came off today's high, choppy like this, right, to the downside, and then right back up into this range again, that also suggests that this is counter trend. Let me explain that, right? So one of the rules for the five-wave move, the thing that I think this is right up here, one of the rules for that is that when you have 1, 2, 3, and then a fourth wave pullback, that fourth wave is not allowed to enter the region of this wave 1. And so when we do have a completed five-wave move, something that might look like one more leg up from today's low or from a little bit lower, you're going to see this pretty distinctive pattern where the middle of the move is typically much longer than an initial start to the move up at the lower edge and the final leg up at the upper edge. That distinctive pattern and the lack of overlap, the lack of this move coming back down into this range here, that's a classic sign of trend-like action, among other things, right? Now let's contrast that with the move down that we see from a week and a half ago. We get a leg down, a bounce, and another move down, and then another bounce that gets right back into the same range. And we come down again and right back up into the same range. And even though we headed down, continued down into a new low for the move on Friday, right back up into the range of all this action before. That is a classic indication of corrective or counter trend movement, suggesting that the trend is still up. That is, said another way, if I come out all the way to an hourly chart and we zoom out a little bit, if this move up from March had truly run its course up here at this all-time high, then I would expect, if the uptrend was over, moves to the downside would unfold in a five-wave trend-like manner before turning back up, right? So because this has a more corrective appearance to it when we drill into the shorter time frames, that suggests to me that whether last Friday's low is the low or not, that it's likely that we're not done the upside, just from the manner of the move back down. Now, when we drill into the short term again, right, we already talked about the fact that this is looking likely to be more trend-like and therefore likely to have some more upside. And we're seeing exactly what we would expect to see, at least so far, if a lasting low were to be in place. That is, we're heading up in that trend-like manner, or at least in a way that is consistent with trend-like action. And even though I would want to see another leg up before I can confirm that this has that 1, 2, 3, 4, 5 wave appearance, I'm looking, as I said, at the manner of the decline from today's high, and it's got that same overlapped quality, right? We come down, we bounce, we come down, right back into the prior range. We come down, right back into the prior range again. And so even though this backed off a little bit late in the day, I'm inclined to think that there is that additional leg up on a short term, and just in a slightly longer term then, evaluating the move up from Friday's low, that then looks like it would be consistent with trend-like action to the upside, and therefore with even further up, right? So that's one of the fundamental elements of my view here. There are a couple other things that I'm looking at as well. Now, we talked about these horizontal lines in here. These are the voodoo lines. These are lines that you've heard me talk about before in these state of the market sessions that Simple Trading has every Monday, and that I'm here off and on, and with you here this Monday, right? So notice that we reflected downwards from this level, and one element of these voodoo lines, which are on these charts at this spot, this level has been here for years, right? So we can see them, we can plan with them, and we can use them not only as support and resistance levels. You see how useful this was as a resistance level. Right? Not only can we use them in that manner, but we can use them as a way to benchmark the trend, because price tends to move systematically between these levels. Zooming out to a 15-minute chart, what I mean by that is that, notice we come down, we bounce, come down. We use this tree line, which is one of the more important levels in the area, as resistance and come back down. But even when we do, we can't break the next level nearby, which we would expect to systematically occur if we were trending down. Instead, we bounce back up, right? So, look, this tree line is more important than either of these white snow lines. So getting back above and holding above this voodoo tree line, and the level for that is call it 3408 in the cash S&P 500. Getting and holding above that level will be important. So, Ibrahim, great question. Might we get a squeeze as well? And there are a few ways to think about that. The short answer is yes. The question is, on what time frame? And let's drill back into the 5-minute chart and look at this move up that we've been talking about from the low. And I know you've heard me count to 5 a bunch of times here today, but let's say we do get that 5-wave move. What we expect after any 5-wave move is complete is that it needs a little correction after it, right? And we may get one. Well, we will get one, right? The question is just, there are other ways to count to 5 other than this. So we might just get a little pullback if we're still within the first 5-wave move up. But once it is finished, let's say it finishes sometime here tomorrow, that's Tuesday, and we start to get a bigger pullback. Well, that, as long as it's a 3-wave pullback, right, or a combination of multiple 3-wave moves, that will keep the focus to the upside. But if we look at corrective behavior, it's really a pause in an uptrend, right? Or a pause in a downtrend. Sometimes it's a reversal, but either way, what we're looking for is a pause here before turning back up. And so if you're not counting waves, one way to look at that, if you are comfortable with the squeeze, is to say, okay, if this is, remember we said corrective action is choppy action, right? Well, squeezes occur in choppy action, right? When you just have consolidation. So could we look for a squeeze here and join the upside if it looks like we've got a squeeze that's going to fire bullishly? Absolutely. Right? Now, some corrections can be sharp, and that's where it can be a little trickier to use the squeeze. And the move down from a week and a half ago is just such an example, right? This move down was much sharper than most, right, consolidation. It still has that three-wave appearance, especially because of this move back up. But it's still, right, and because it has that three-wave appearance, I still like the upside. Now we can look and we can ask ourselves the question, if I bring up some other charts here, does this, do we have a squeeze on some time frame, right? If we come in here to a 5-minute chart, well, no, 15 or 30 might be better, right? If we pull up a 30-minute chart of the S&P 500, can we see a squeeze forming in here? And with the Squeeze Pro, we can see some low compression squeezes that were forming through here, but nothing that would have helped us catch this low. Now there are some other things that would catch this low, and if you use the squeeze, right, and you like, therefore I'm presuming you like John Carter's way of trading some of these things, well, you might want to catch his new upcoming class, because there is also in his new class, which I see someone has helpfully posted for you in the chat, this Ready Aim Fire Pro. This is an indicator that I've built that right, we've got ready, aim, and a fire in here at the low on the 30-minute time frame, on multiple time frames. This is good, right? A tremendous tool for catching reversals like this one off the low. If we get that pullback that we're talking about in the S&P 500, a move up, 5 waves, a pullback in 3 waves and turning back up, Ready Aim Fire is exactly the tool that I will be watching to see if we're turning back up, and to time that entry. And the nice thing about this, if you do like the squeeze, is that the additional features here in the Ready Aim Fire Pro that aren't in the original Ready Aim Fire, they coordinate great with squeeze signals. John, I know, will be doing a case study with Tesla, right, where he's done a few $1 million plus trades recently, several, right? And the idea there, you can see you get a squeeze in here, and then you use these pro thrust dots in here to trigger that a trade for a move out of the squeeze like that. And then you can use the Ready Aim Fire dots for exhaustion reversals as a way of getting out of those. So for moves like that, or if you want to know more about using that, that's not our state of the market stuff here today, but just grab John's webinar that's coming up Thursday night. He will be telling you more about his Tesla trades, how this comes into it. What I'm really talking about here today is why I think this market is heading back up, right? What I'm going to be looking for, pullbacks to have that same choppy, corrective, three-wave character. And so long as they do, looking for more upside. Right? So that is the guts of what I'll be looking at. And yeah, I mean, Sparky, they are running Tesla up. I mean, what? Just about $2 since the close, but they certainly did drive that up today. Henry and I were talking about Tesla earlier today. I mean, we can bring that chart back up, right? And look at it with the Voodoo lines. Look, these levels are not unimportant here. These green tree line levels here. So we've got one down here at 347.5. This upper one, let me see if I can get you a price on it. There's some other things overlapping it, but call it roughly 385. Look, holding 385, and I'm going to look to the upside, especially if it keeps, finding these smaller levels and finding support there. The fire line, the red fire lines, those are the really important levels in the area. 443 there. I've got a 61.8 retrace drawn in here. I know it's a little bit small. We came pretty much right up to there today. We'll see if they break through, right? I'm not. What Henry and I were talking about today was that, look, if the market turns back up, as it looks like it's doing, and we were talking about this right after the open, then Tesla probably gets some bounce. I think it remains an open question whether this is broken now and just gets some participation, or whether it goes to new all-time highs in Tesla if the market goes to new all-time highs. I really don't know. Tesla's been doing great for us the last month or two. And so we'll see. But it's not high on my list. I've got some 500 butterflies for this week, which is pretty ambitious, but they were pretty cheap. We will see what's going on there. All right, so yeah, a little look at Tesla. We've looked at the S&P 500. Those are the things that are on my mind as far as the state of the market. I am bullish. Obviously, things can change. They often tend to change pretty quickly after my state of the market sessions. But for now, so long as we hold Friday's low, I'm looking to the upside. So long as any pullbacks in here have that three-wave choppy character, I'm looking to the upside. And then, all right, so long as any move up doesn't end as one of those three-wave moves starting to come back down, and after we get a leg up and a pullback, we just keep extending, again, I'm going to look to the upside. The other things that will keep this on track for me are going to be those Voodoo lines. So shorter time frame, I'm going to bring these smaller degree lines on here. I'm going to be focused on this skyline here, which comes in at 3366 in the cash S&P 500. So long as we mostly hold that before another high, I'm okay looking for that one more high. After that new high, it can be a deeper pullback. After that deeper pullback and another leg up, I want to see it holding this 3408 level. Right? So, and then, watching how it behaves, seeing if it finds systematic support above these levels. And I think if it does, then next time up, we crack this upper snow line that was our all-time high right at a Voodoo line and keep going. So if you guys have other stuff related to the markets that you want to talk about, hey, now is the time. We have a few more minutes before we wrap up. But that's the main thing that I wanted to cover as far as the state of the markets. Gold and silver, I think, are a little messier than I would like. We can take a look. Here's a chart of spot gold. And I've got a few different charts here. This one may need some adjustment. Well, all of them need some adjustment. Let's see if I have the more bullish one plotted out. You know, my gut is that this is starting to look like it's wedging into a triangle. And so if we can hold nearby swings, maybe cautiously look up. I don't have that drawn out here for you now, but I am not looking to do this right now. I'm not going to be able to do that crypto here today, just because the trading platform I have up for you doesn't have any of the crypto in my data feed. Sorry about that, but we can maybe do that next time around. Right now my positions are in the S&P futures, right? So E-mini futures, micro futures, combination of both of those. I am long from Friday and seeing if I can run those. I do sometimes trade them with options as well, but my only positions are there and in Tesla as it happens to be. All right, so so the spiders, if you're asking just about the SPY, then that's going to follow the cash S&P 500. So I'm definitely looking upwards there. Right. So that'll be aligned. I just find that the cash S&P index is going to give me the cleanest read when we do this charting. As far as trading rooms, absolutely. Simple Trading has a bunch of them. I am more often, if you're looking for this Elliott wave analysis, I am in our futures room every day. But I'm also twice a week in our options trading room. Can I explain the difference between futures and options on futures? Only in a very brief way here with the time we have today. But options on futures are really the same as options on stock, right? So with options on stock, let's say you buy a call, you have the right to acquire that stock at the strike price. The only difference in options on futures is that what you have the right to acquire is a futures contract. So, just like a call on Tesla will become more valuable as Tesla goes up in price, right? All things being equal, because time volatility will impact that. The same thing will be true if you have a call on the E-mini S&P futures. Should those futures go up, the value of those calls will go up, and since the futures will, for the most part, track the cash S&P 500, it's just another way of playing that. There is some nuance, right? Most stock option contracts are for 100 shares of the stock. Most, in fact, all futures contracts that I'm aware of are for a single, all futures options contracts are for a single futures contract. And there are advantages. You have all day tradability of those futures options. So there's a lot to like about futures options, but we can really only scratch the surface here. So I appreciate all the questions. I'm sorry I didn't get a chance to hit all of the symbols you guys threw in there, but that's what I've got here for tonight, folks. Thanks for spending a little bit of time with me. Again, I am thinking we're bullish so long as we keep seeing the price action that we talked about here today. That's the state of the market here for this Monday, and I hope to see you all back here again sometime soon.